RP Sanjeev Goenka Group, growing legacies.
Hello and welcome to Hot Money on Bloomberg Quint Live, India's first digital live streaming business news service. This is a show which gets you a complete wrap of all the stocks that are buzzing in trade. I am Darshan Mehta. Let's welcome our experts then, independent market expert Shahina Mukadam, independent investment advisor Vivek Mavani, and Samir Kalra of Target Investing join us on the show right now. Today on Hot Money, we'll discuss stocks like Fortis Healthcare, Delta Corp persistent system, and we ask them a top pick for FY19. Now let's start with the first stock, and that is Fortis Healthcare. The counter has corrected over 10% since the news of the deal with Manipal Health has come out. The counter has managed to recover in today's trade. What we are asking is our guest, and the big question is all the negative news now priced into Fortis Healthcare? Is this the right time to start accumulating Fortis Healthcare? So we'll start with you, Samir. Is this the right time to start accumulating Fortis?
Yes, so we started accumulating anything below 135 because see, where we take into like a pre-deal kind of evaluation, and we see even if the RSG trust comes in, the value only increases and the expenses go down. And plus, if a new promoter comes in, whether it's Manipal, because still now recently Elliott management and all the major institutional shareholders have come together, which accounts for around 30% of shareholding, and they are trying to have a EGM through which they want a new board to be inducted and then take a whole transparent bidding process. On the other side, if you see what Manipal has told, it's kind of a more positive for them. So I think as a pre-deal valuation, it's a good enough situation right now to accumulate.
Okay, so that's the view. Samir is indicating it's a good level to indicate. What about you, Shahina? Is this in the price now? Is it a good time to accumulate Fortis?
I would think so. I would continue holding. I think the valuation was adverse to Fortis shareholders, and I think some of the large shareholders are taking cognizance of it and trying to put forward certain suggestions as to various other options that are possible before this merger. So nobody is denying that it's a good merger with Manipal. So it's definitely a positive, and I think once that goes through, the overall valuation on base of P expansion is going to be a positive for existing shareholders of Fortis Healthcare. But yes, I think the valuation could have been better for Fortis shareholders, because you're contributing almost about 40% to the total bed post the merger. I think the large shareholders will try to get a better deal, and I think that is positive for shareholders as of now. Continue holding if you're holding, and yes, you can add, I think, looking with a 1 to 2 year holding view, because I think the P will expand.
Okay. What about you, Vivek? What's your first take on the Fortis deal?
Well, I'm quite on this your program in the last couple of months. I've mentioned I'm not too enthusiastic about this company itself, because there are certain stocks, no matter what the circumstances, no matter what the market scenario or the market mood, it's just so difficult to make money in a stock like Fortis. It's just too much of uncertainty, too much of noise, too much of news flow. All of it at some point of time just doesn't make sense. So how do you really find an opportunity to make money? Even with this Manipal deal announced just before the long weekend, obviously the deal seems to be favoring Manipal more than the investors of Fortis. But I guess the promoters, the Singh brothers, really had no choice in terms of, or they had limited choice in terms of what deal to offer, because there wasn't really any attractive deal coming their way. That was number one. Number two, today's papers, if one were to believe that, Daiichi is probably going to be moving the regulators and probably even taking legal action in terms of stopping that.
Your minute is up. I'll come back to you on this. So basically, I think the gist we're getting is that two of our guests do believe it's the right time to start accumulating. Vivek believes that it's not the right time, and Vivek was saying something. So Vivek, I'll throw this open for discussion. You were saying what seems to be the big concern that you're having?
No, so even now, Manipal has put its offer on the table. It is now Daiichi has obviously moved to the regulators, written to them to stop the deal from happening, because they have had a arbitration in their favor, and the personal assets and stock and shareholding of these Singh brothers is supposed to be attached. So I mean without Daiichi being taken into confidence, or without the courts being taken into confidence, the deal may not go through. So a stock which has had a lot of uncertainty in the last 1 year or so, the uncertainty still doesn't subside. One really doesn't know what could be the outcome of those legal tangles that the promoters have got into. We don't know what kind of mess that they are leaving back as far as Fortis is concerned, which Manipal may have to clean up subsequently, assuming the deal does go through over the next 6 months or so. My estimate is it's not going to happen in anything less than 6 months time frame for actual execution. So net, I see the stock being range bound, very difficult to make money either on trading or on investment. Best to stay away. There are a whole lot of other opportunities available in the market, in the correcting market. Why just stick to Fortis?
Yeah, so Samir, I think you said that you like it, but some of the points that he put are valid, because it's not a good deal for Fortis shareholders. They've been squeezed from every side. There's no clarity on the liabilities. If any liabilities of the SFIO probe comes in, it will fall on the Fortis shareholders, and now there is a holding company discount that Fortis will get. So what benefits will someone get on this?
See, first we have to try to understand why is it happening. One is they don't have another buyer to come in for the assets, right? Secondly, Manipal has offered what they have offered and why they have offered. If you see, the RSG has 6 months to apply with the promoter issue. If they don't apply with the promoter issue, it will go non-promoter holding kind of a trust, and it submits to the public. So that time all the trustee kicks in as a owner of the RSG. So that's why there's a hurry to get this any kind of deal done. Now the announcement, I agree, certain kind of valuations are kicking in and there will be a value of holding discount, but see, right now there's no demerger happened. My only point is that demerger which is not happened right now, still everything is still through Fortis Healthcare. So you are still buying into the whole deal. It's not a post facto arrangement which you're buying into Fortis Healthcare. So that discount will apply when the demerger actually happens. So right now, even if I'm getting a Manipal Enterprise shares post the deal, I'm still happy out of it. So I think this is a little skeptical about everyone. But even if that EGM goes through of the minority shareholders who have come together, I'll still be happy on the both sides. So I'm still happy with the valuation they've given, because I see the future of the assets and not Fortis Healthcare as a company listed. I see more of the demerger value which will come in, or the other part, if it doesn't go through, then you have a proper transparent process coming in.
Okay, so I think we need to move on to the next talk, but I think the gist that we are getting is two of our guests to believe that despite all the concerns, it's the right time to start accumulating Fortis, and Vivek on the other hand says it's a clear avoid at this point of time. The next talk we want to speak about is Delta Corp. The counter fell in significantly on Wednesday post the news that came in terms of the Goa government hiking casino fee structure. It's managed to recover slightly. It's just up 1% today, not even 1%. But what we're asking is there more downside or the entire risk has been priced in? So, Vivek, I'll start with you. Delta Corp, your view, 1 minute.
Well, to answer your question, is the downside priced in and can it correct more? My sense is it can correct more and it could grind. It may not crash, but could just be grinding. I mean, the upside definitely to me seems limited. And it is more to do with the business fundamentals. Any business where the government exercises significant control always has that uncertainty, unless the business is so strong that the government risk can be passed on in terms of pricing power, which cigarette and liquor companies tend to have. Delta Corp doesn't have that. So Delta Corp over a period of time will rationalize their licenses and the casinos, number one. And obviously for what remains, there will be sharp price increases to make up for this higher license fees, which could affect volumes and occupancies. So, and valuations don't give me comfort. So, for me, Delta Corp is an avoid for these precise reasons.
Okay, avoid. What about you, Shahina? What's your view on Delta?
I would be buying it at current levels because I think the downside is very limited. I see the downside just about 20 rupees from here, which is 230 odds, and I think it is will find a strong bottom. The reason why I would be buying it is yes, the fees, the renewal fees increase has been substantial. They're talking of an increase like more than doubling, between 2.5 to 3.5 times. So it is high, but at the same time, I think if you look at it in terms of the impact on profitability, I think it would be about 20 to 25%. And given the current decline in stock, if you see in the last couple of just last 2-3 months, I think this news has been more or less known, and there is going to be some increase because the Goa government is facing resource crunch. So this is one of the only sources, or one of the few sources they have to shore up their own revenues. But I think if you look at it from the Delta point of view, it is a major player in the segment, and I think it is going to be absorbed. So I would be a buyer.
Okay, buyer. So, and your 1 minute, Samir, before we go on to the open discussion.
I don't have a view on Delta because I really don't understand the business. Because over here in the gambling business, if the client wins, the company loses. And if the client loses, they won't turn up next time. So I really don't understand the methodology of running this kind of a business in longer term. So I'll keep away from this kind of
so we'll throw this open. So Vivek is negative on the counter. Shahina does indicate it's the right time to start accumulating, and Samir actually does not have a view. So we'll open it up for discussion. So some of the points, Shahina, that he pointed out, it's severely facing government regulation. Secondly, it's been so many years, everyone was optimistic on the Daman casino license. It's been so many years, it's not getting, and online competition has increased. So why should someone buy a Delta Corp when it's getting squeezed on all sides with issues here?
See, I think it is one of a niche player in the hospitality and entertainment business. And if you go to Goa, you really, you as a visitor, you will visit one of their casinos. So I think to that extent, they will be able to pass on, over a period of time. And the impact on profitability, if you see they have started doing very well. If you see the last quarter numbers, there was a phenomenal improvement in numbers. So I think, yes, it's going to be a hit in the EBITDA, but the stock has also corrected. So I think to that extent, if one does want to, take a share in the hospitality and entertainment business, I think you don't have too many choices. And I think if you go to any of their casinos, which I think all of us visit when you go to Goa, it looks like, the increase in fees will be absorbed over a period of time. You're willing to pay that little extra for the fun and games. So I would be a buyer at current levels.
But are you happy with the valuations? Because despite all the concerns, it's still trading at 40 times FY18, 30 times next year. So aren't the valuations a concern for you, or are you giving that scarcity premium to Delta?
I think I would give the scarcity premium 1, and I'm a bit happy because the stock has corrected. At 400 rupees, it was really, really expensive. So if you look at the overall entertainment business, you don't have too much of choice. So I think the scarcity and the growth that they're talking about, license fees have been increased in Goa, but you have other areas that are now looking at the same other states that are looking to capitalize on this business. And given their expertise, I think they would be one of the forefront. There may be delays, but I think if one is looking to enter into that business, and I mean in terms of an investor, this is a good opportunity, bad times and good opportunity to start looking at the stock. So I have a neutral, but I would be looking to enter because it is downside is limited. Okay,
Vivek, what's your view in terms of regulatory issues and valuation for Delta Corp? And is there growth, because financially they have been improving? Is that something that could work in favor?
Yeah. I'll agree with your point on financials improving, no doubt. But valuations at 40 times, as you mentioned, current year is FY18, the year we just concluded last week. And we had, 30 times. Now, 30 times was based on estimates by various brokerage houses before this news. Now, we don't know what kind of price increases may be required to maintain the same level of earnings that one was estimating for financial year 19 and 20. So quite likely the valuations on a forward basis are not 30 times, but maybe about 35 times or 36 times, depending on what kind of hit you take on earnings, what kind of hit is assumed on earnings. Right now it's all going to be on assumptions. That's number one. In spite of, the current multiples, valuation multiples, capture more than the performance, they capture of the potential. Now, potential itself is a big question mark. I'm not really willing to stick my neck out that we have a huge market which is going to explode as far as this kind of a business is concerned. Even if it does, the government regulation in terms of government having an upper hand in everything, in control of this business, doesn't give me that comfort. I mean, it's not an ITC or a United Spirits where price increases are easy and yet your demand doesn't get affected. Maybe there's a slowdown in volumes, but here it could actually be, there could be a serious hit on volumes and growth.
Okay, so I think that's the general view that we're getting. I think we got both sides of the view as far as Delta Corp is concerned. So now we need to move on to the next stock, and that is Persistent Systems. The counter corrected massively on Wednesday post the company, indicating the fact that the fourth quarter guidance will be weak. IP revenues will be down $8 million quarter on quarter, and probably that will be a hit on the margin. The counter has managed to stabilize in today's trade, but will you accumulate Persistent System in this fall is the question that we're asking. Shahina, we'll start with you. Will you accumulate Persistent in this fall?
Yeah, I will. Because I think while it is a concern that their IP business is being affected and that is going to result in lower numbers for the fourth quarter, which the management has guided. So I think again here we see the sharp correction after very good numbers in the third quarter. I think one would be looking at it to accumulate because I think the overall IT is back in in focus. One of the few sectors which is doing and expected to do relatively well over the next year. And I think the rupee dollar is also moving in favor for IT companies, and I think that yes, maybe the fourth quarter would be impacted, but and it's also not a seasonal quarter for them, but at the same time I think next year should be better. Valuations in my view attractive at about 16 times current year, and I would be a buyer at declines.
Okay, so Shahina said it's a buy at this point of time. Samir, your view, would you buy at this fall?
So I would wait for the Q4 results and the con call of the management. What I would like to see, because analysts were estimating a $3 to $4 million adjustment, which is seasonal in the IP business, but their guidance came to 8 million. So that's almost 100% increase than the estimate. So there will be a hit on the estimates of the analysts also. Now I think I would like to see whether this spills over to Q1 as well, or what is the reason of this weak guidance. If it's something which spills on to Q1, I think there will be a further downside. I don't see much of an upside unless the results and the management is able to convince that the weakness will only last for the Q4 results.
Okay, so it's a wait and watch approach by Samir. And Vivek, what about you? Will you accumulate Persistent?
Yeah, for me, I mean, my view is Persistent is definitely a buy on declines. Now, this profit warning of about loss of maybe 8 million of revenues in Q4 obviously is going to affect profits by an equivalent, earnings by an equivalent number, because these revenues come with very little, I would say, costs attached to them directly. So there is a hit in Q4. But even accounting for that hit, the valuations are very comfortable at about 12-13 times 1 year forward earnings. I mean, we are talking about FY19 next year. That's next year earnings. That's number one. The non-IP business, which is the enterprise business and the business that they have with IBM. Apparently, IBM is now close to 30% of their revenues, where they are quite embedded with what IBM is doing in terms of IBM's Watson IoT and the other digital initiatives. Those businesses are growing at upwards of 20%, the non-IP business. And probably that growth trajectory will continue. A company with more than 1,000 crores of cash flows, cash on the balance sheet, free cash flows.
I'll get back to you on this. So basically the consensus that we are getting is two of our guests do believe is the right time to start accumulating, and it's more of a wait and watch approach that's coming in from Samir. So Samir, I'll start with you. Is this, this is the first IT company, mid-cap IT company which is put in some concerns, and overall mid-cap IT has run up significantly, valuations much higher. So do you think that the entire mid-cap IT is at a concern because of what, or this is a one-off event?
So I am always in the favor of a large IT business, because the cash flows are much more stronger and much more resilient to downturns and towards the cycles. Mid-cap, what happens in any positive, even a 5% cycle or a 5% expectation surprise, it runs up quite quickly. So the valuations quietly stretch. If you take a case of Persistent, I think the valuations are still decent. But my only concern is what led to this this weaker outlook. And if it's a systematic weaker outlook and it will persist for this 1 year, then the valuations will come off because IP gives them a good amount of margins. So there is an estimate of 3 to 3.5% of margins coming down because of this loss or this loss of revenue. So I think I'll be looking more towards the outlook of them and the con calls towards that.
Okay, Vivek, you were saying something. I had to cut you short, but you can continue. What you were saying?
Yeah. So what I was referring to was that the non-IP business has been growing in excess of 20% for the last 8 to 10 quarters that I can remember. That has also led to margins expanding. I mean, just in the 9 months of the year just gone by, margins expanded by almost 300 basis points, and nothing to believe that that part of the business will face margin compression issues. IP, of course, there's going to be a serious compression of margins simply because of this loss which will happen. I mean, loss of revenue which will happen in Q4, perhaps will spill over in Q1 also.
Okay.
I do agree with Sameer that maybe we should wait for a month or so, where by the time when the results will be declared, and find out as to whether this is going to recur or is it a one-time event.
Shahina, do you believe that this could be a one-time or this could probably recur? And is this a serious concern for the entire mid-cap IT industry as such?
No, I think it is specific to Persistent because it's IP related. The numbers from their product are coming down, and I think it may persist for some time because they are talking of reducing the revenues of a particular product that they have into. So it may continue into the first quarter, but I think to that extent the price is also corrected. We've seen a sharp fall in the last couple of days when that announcement came. So I think to an extent it is factored in and one can start to accumulate.
Okay, so I think the view on Persistent is that two of our guests do believe it's the right time to start accumulating. Sameer, on the other hand, says that it's a wait and watch approach before he decides to do anything on it. And the last one, actually, since it's the start of the new financial year, we're asking our guest what is the one stock that they will bet on so that, you know, for FY19 that could be accumulated on a fundamental basis. So we'll start with you, Shahina. You like NBCC, why?
Yeah, because it's been a non-performer. Okay, in the last 1 year. And if you really look at the numbers, I really wonder why. But the quarter numbers were very disappointing. They were sluggish. They were flat. So yeah, the stock has not, has corrected, not given you that return. But I think that is something which all real estate companies have suffered from. I think going forward, if you look at the order book, if you look at the execution, if you look at the easy orders that they keep getting, and if you talk of various measures that the government is taking to bring back money and to capitalize monetize some of the assets of the PSUs, there doesn't seem to be any space in the near term future, even in the medium term, where the order book is going to dry up. So it's a matter of execution. So, and I think we have to expect lumpy numbers coming in from companies like NBCC. So I would take it in my stride, and I think even technically it's looking good as of now. So for short term as well as for the longer term, I think the company is well poised to bottom out at current levels. So I would start accumulating by.
Okay, NBCC is the view, is the stock that Shahina is saying. Vivek, you like Swaraj Engines. What's the rationale?
Yeah, so that's the repeat. So if you recollect, I mean, in the first week of January, that was also my pick for 2018, and even for the financial, it's my a very strong company, supplies tractor engines to the Mahindra tractors in North India, what used to be erstwhile Punjab Tractors. So this used to be the sister company of Punjab Tractors. Very clear transfer pricing mechanism with Mahindra, gives them more or less assured margins, assured return on capital, a very robust balance sheet with upwards of 250 crores of cash, consistently generating more than 25% return on capital, return on equity for the last 20 years. I mean, very few companies have that kind of a track record. Adjust for the surplus cash, and return on capital, return on equity from the core business is upwards of 70% actually. They've just expanded capacity, so there is operating leverage also. I mean, they've expanded capacity from 105,000 engines to 125,000 engines, which would be expanded to 150,000 over the next 2 years. So you're going to have volume growth, steady state margins, and free cash flows. A company that just churns out free cash flows, which very few other companies have. At 2,000 rupees, I mean, in terms of valuations, at about 22 times next year earnings, that is FY19 earnings. Dividend expected about 55 rupees a share, so you'll have about close to 3% of dividends. And they've just concluded a buyback a month back at 2,400, which is where some of the surplus cash also got utilized. But I see very limited downside on this. a consistent long-term performer in terms of a compounding machine.
Okay, so Swaraj Engines is what Vivek is saying, and Samir, why Infosys?
See, two reasons. One, if people are expecting a volatile markets this year due to elections, due to crude being up, there are certain factors which is making that pessimism kick in. I think defensive and especially in that IT will be the place to be in, and especially in that I favor large caps. And out of that Infosys, because if you see last 2 years they have been facing issues on the growth side and on the management issues. So that is on the past now. The first 3 changes in the top management have happened by the new CEO. So I see a lot of movement, and in April during the post-results conference and the meeting, they are expected to pan out the FY19 outlook and how they work out on the digitization and all these AI. So their AI products are doing really well, and they're getting more clientele added over there without any much spend on the bench and all.
Okay, your time is up. So now we'll just ask them a question. So the top 3 picks our guests have spoken about. So Samir, Infosys, what makes you positive that growth will actually return? Because for the last few years it's been rather sluggish.
So what will change is, see, right now what's happening is the major traditional businesses are kind of slowing us, showing a single-digit growth. If you see the other part, the new CEO which has come has a history of changing the growth trajectory of the company, given into the digital focus and the automation focus. That has happened in the previous company he came, and now the whole point is if you have a good settlement between the promoters or top management and new top management, there are changes which is happening according to them. So I think there will be a higher addition. Now the attrition has slowed down drastically, which I think supports the numbers growth.
Okay, Shahina, in NBCC, any targets that you have, and what are the key risks that NBCC has in case of a recommendation?
See, for the short term, I think 200 is very easy to get, and in the slightly medium term, I would say 220. This is based on very decent valuations that the company offers at current levels.
Okay.
They have got something like 50,000 crores of real estate orders, which are really self-generating revenue type of orders, which I think will be executed. Numbers should be better. It's lumpy, so I think overall valuations are attractive, and you have a very good balance sheet, strong balance sheet. Very low debt, very easy orders that are flowing in. So I think overall one should remain invested in this stock. Okay,
Vivek, very quickly, 30 seconds because we're running out of time. Any risk in Swaraj Engines, and in a word on valuations?
Well, if the rural economy were to, I mean, right now the focus is rural economy seems to be doing well, and is apparent from the tractor numbers and the agri equipment numbers. That itself remains a risk. I mean, if Mahindra's volumes don't come through, Swaraj Engine's volumes also get affected. So at best, or at worst, you may have a year where there is probably no growth in... Is
M&M the only company supplies, or it supplies to multiple other?
No, this company supplies only to M&M.
So its fortune is dependent on how M&M...
Which is right, exactly. And that too only in North India.
Only in North India.
Only in North India.
Okay, and just a word on valuation. What's the valuation?
Valuation for next year, that is financial year 19, it's about 22, 23 times. And I mean, if you're looking at 20, then it's maybe 17, 18 times.
Okay, so I think the view that we are getting in the 3 top picks that our guests have spoken about today. Samir likes Infosys, NBCC is the pick of Shahina, and Swaraj Engines is something that Vivek has spoken about. With that, we are completely timed out on today's Hot Money. Samir, Shahina and Vivek, thank you so much for joining me on the show. Ask BQ comes up next. Stay tuned to Bloomberg Quint.